People are making thousands of dollars in DeFi without ever touching a bank. And today, I will explain it clear and simply, with examples like toys and candy. Imagine a huge digital playground, open 24/7, no adults, no bankers, nobody in charge. Kids arrive with their toys, and instead of just playing, they can earn candy, trade toys, and even lend them out and get paid. That's DeFi, Decentralized Finance, where all the rules are written in smart contracts, not run by banks or apps. And the number one metric to measure how big and active this playground is? TVL, Total Value Locked. Let's say 100 kids each brings 10 toys to the playground. They all drop their toys into one big chest in the center. Now the chest holds 1,000 toys. That's TVL, the total value locked in the system. In real crypto, those toys are digital assets like Ethereum, DAI, or USDC. So when you see a DeFi app with TVL of 5 billion, it means users have locked up to 5 billion worth of crypto inside for lending, trading, or staking. Here is the magic part. This isn't just a toy chest. It's a rewards machine. You lock your toys inside, and every day you get candy. Not imaginary candy, of course. In DeFi, this means reward, like interest payments, trading fees, bonus tokens from the protocol. So if you lock more toys or higher value toys, you earn more candy every day. This is how DeFi turns your crypto into productive assets. So let's imagine some kids come to the playground but forget their toys. So they borrow from the chest, but with a catch. They borrow 10 toys, but return 11. That extra toys gets turned into a candy and distributed to the kids who provide it. In crypto, this is called lending protocols, and one of the biggest is Aave. Before I go any further, this video is for educational purposes only and not financial advice. Please consult a qualified professional before investing. Crypto Practica is not sponsored by any platform or service in this video. My views are independent and based solely on research to give you clear and useful information. Aave is a DeFi lending platform. You deposit assets like Ethereum or USDC, and others can borrow them. You earn interest as a reward. No middlemen, no banks, just smart contracts doing the work automatically. But let's see, other kids wants to trade toys. A red car for a green dinosaur. That's easy. The chest allows instant swaps but charges a small candy fee. That candy goes to the kids who fill the chest. And this is how Uniswap works, the biggest decentralized exchange on DEX. Uniswap lets anyone swap crypto tokens instantly. Behind the scenes, it uses liquidity pools, a fancy way of saying a shared box of toys provided by users like you. Every time someone trades, a small fee is paid. That fee is split among the liquidity providers. More trades equal to more fees means more candy. We have been mentioning DAI a few times, so let's explain. DAI is a stablecoin, a type of crypto that always worth amount $1. But unlike USDC or USDT, DAI is decentralized. It's created by a protocol called MakerDAO and backed by other crypto assets, not fiat or banks. Think of DAI as the toy that never loses value, the safe, stable one in the chest. Now that you understand the mechanics, here's why TVL matters. High TVL means more users, more assets, more trust, more rewards. It's like waking up to the chest and seeing it overflowing with valuable toys. You know it's popular, you know it works, you know there's rewards to earn. Projects with billions in TVL like Aave, Uniswap, Curve are where real crypto activity happens. But here's a quick note. What is Curve? Curve Finance is a DeFi protocol built for stablecoin trading, and it lets users swap assets like USDC, DAI, and Tether with ultra-low slippage, meaning you don't lose value in the trade. It's like a toy chest made just for identical toys, super efficient, super fast. Curve TVL often hits billions, trusted by whales and protocols alike. Let's say you deposit 10,000 in USDC into Aave. You earn 4% annual percent yield. That's 400 a year, or more if rates rise. Adding rewards tokens like Aave or extra incentive, you might hit 6 or 8%. Same with Uniswap. If you add liquidity to a pool, your share of the fees builds up daily. DeFi turns your crypto into working capital, not just something sitting in a wallet. As magical as it sounds, DeFi is not risk-free. Let's be real. There's no candy without a catch. Here are the 4 main risks to know before locking your crypto into any protocol. Smart contract bugs. Even top DeFi projects run on code. If there's a bug, hackers can exploit it and drain funds. Platform hacks. Without proper audits, protocols are vulnerable. Even billion-dollar projects have been drained in minutes. Token volatility. That toy you locked up could drop 40% in value. Rewards don't mean much if asset crashes. Impermanent loss. If you provide tokens in a trading pair like Ethereum DAI and prices move too much, you could lose money compared to just holding them. It's complicated, but it's real. That's why smart DeFi users start small, use audited protocols, and always know the risk. Even with the risk, TVL remains one of the strongest signals in crypto. It shows you which protocols people actually trust, where the money is flowing, which projects have real use cases. Projects with high and growing TVL usually offer better incentives, deeper liquidity, and stronger communities. So here's a big takeaway. TVL is the total toys locked in the magic chest. DeFi is the playground where you earn candy for sharing. Aave, let other borrow your toys, get candy back. Uniswap, let others trade your toys, earn fees. Curve, the most efficient toy swap for stable toys like DAI. DAI, the dollar equivalent toy that never loses value. And candy, your yield, your interest, your income. If you get this, you already understand DeFi better than 90% of people in crypto. If this video helped you understand what's changing in crypto and why it matters to the world, share it and subscribe. Cryptopraktica is a positive channel that shares news and information about finance and cryptocurrencies. Always focus on empowering you with knowledge for your growth and financial education. I look forward to seeing your comments. Until next time.